Hello and welcome to the Partners Guide magazine show. The Partners Guide is a magazine focusing on business and economic issues both within and affecting Zambia. My name's Wilbern and we're here at the Pangea Investment Conference at the Radisson Hotel in Lusaka, Zambia. Our guest today is Charles Robertson, the Chief Global Economist for Renaissance Capital. Welcome today, Charles.
Thank you very much. It's great to be here.
No, it's a pleasure having you. Now, Charles, you've written a book called The Fastest Billion, which has some fascinating insights into the economic future of Africa. I don't know if you can just give us a brief summary of what that book's actually about.
It's partly trying to explain what has already changed and why the billion people in Africa have already experienced the fastest growth the continent's ever seen. And that's a combination of better governance, perhaps more democracy, better education, more private capital, more entrepreneurial spirit. This is just all of it. We can see the evidence for each of these things happening. We wanted to outline what had gone right, the company successes that are already seen across the continent, and then we wanted to say what happens next. And the trajectory of growth that we fastened onto was what has already happened to some extent in Latin America, but more interestingly in Asia, and particularly India has been a very valid model, I think. Talking a billion people, very different states within India. I mean, it's not the same as Africa, it never will be, a continent versus a country, but the trajectory of growth has been very similar.
Okay. Now, we've seen a slowing down of growth in Latin America and also in India in recent times. Don't you think the same thing is just going to happen with Africa?
There's always the business cycle, and developing Asia had that, and India's slowdown in recent years very much echoed what developing Asia did in the late 90s. And then you get another reform effort, and India's just, in electing for Modi to be Prime Minister, is likely, we think, to see an acceleration of growth. And there's going to be a business cycle in Sub-Sahara too. There's been an accelerating growth story for 10, 15 years. Our base case is that due to weaker commodities, that's not going to be as strong in the next 5. We're not going to see the same continued acceleration for the next 5. This is the consolidation phase.
Okay, so you're looking at a slowing down of commodities, well, which will affect Africa, obviously. Now, many outsiders will view Africa as a continent which is heavily reliant on commodities. So how will Africa be able to sustain this growth with a slowing down of demand for commodities, but also a lowering of the prices of the commodities as well?
There's to some extent a misperception. Yes, there's a Nigeria and an Angola which are pumping out a great deal of oil, or there's been gas discoveries in Tanzania or Mozambique. But across East Africa, you've had booming growth in countries like Ethiopia, countries like Uganda, Rwanda, which are not exporting a great chunk of hard commodities. Yes, there's tea and so on, but that doesn't appear to be what's driving growth. It's more about infrastructure. It's more about services, telecoms, M-Pesa in Kenya. It's more, to some extent, even tourism for some countries has helped them contribute. So actually Africa's got the full range of countries, from the heavily commodity reliant to the countries that benefit from falling commodity prices because their oil bill is going to be going down. It's probably good news for much of East Africa right now. And when it comes to new gas fields in Tanzania or Mozambique, this is just brand new supply coming on stream from nothing. To go from nothing to exporting some gas in 5 to 10 years' time is going to be very, very positive for these economies.
Okay. Now, the Pangea Investment Conference, it's an investment conference designed around promoting opportunities in non-traditional sectors, and by non-traditional in Zambia, we mean outside of the commodity sector. So, in the context of Zambia, what do you think are the most attractive investment opportunities in the short to medium term?
We share, across Sub-Sahara, we see some pretty similar themes. Telecoms has been a theme across many, many countries. From 1% of people in Nigeria having a phone line in the year 2000 to 70% by 2012. So telecoms is a constant theme. Bank lending is likely to be a constant theme. Again, that M-Pesa system, the idea of moving money through telecoms, but effectively we're talking banking, being a huge growth area. We've also seen it in consumer names, which have been very well bid by foreign investors in recent years, from the Nestle's and Cadbury's to more local players. So each of these sectors has got growth potential. Where I think we're going to shift in the next 5 years or so is going to be light manufacturing. That China's now got so expensive. Per capita GDP is up at $8,000. 10 years ago, 12 years ago, it was down at about $1,000. So suddenly China's actually quite expensive. I mean, it's expensive wages. And manufacturing for, say, textiles is moving to maybe Vietnam, maybe Bangladesh, maybe Ethiopia, and elsewhere across sub-Sahara.
Okay. Now, in terms of manufacturing, many onlookers will say, well, in order for there to be, a decent manufacturing sector, you also need the proper skills in place. And okay, we've seen some manufacturing shift from China to other locations within Southeast Asia, perhaps also Mexico as well. But how do you see Africa taking advantage of these opportunities which will be coming up in light manufacturing?
There's two prongs to this, and the first is the supply side in terms of human capital. And education levels across sub-Sahara are vastly broader than they used to be 20, 30 years ago. And that already creates a supply of labour which can be employed in textiles, and we saw that in emerging markets in the 1970s or 80s, and we're seeing that now in frontier markets today. The second element which is crucial is electricity. You can't run a factory if the electricity supply is intermittent or not there. And so it's no surprise then that having had 10 years of fantastic growth from 2000 to 2010 or 11, that sub-Saharan governments are now paying more and more attention to electricity supply. So you take Nigeria, it was the key issue in the presidential election of 2011. In Kenya, at the most recent election, they promised a tripling of electricity supply within 4 to 5 years. So you've got to have electricity, you've got to have human capital. Both of them are coming through.
I think we can see both of those on the rise in Zambia. Many commentators may feel that, wow, if Zambia is going to take advantage of opportunities in manufacturing, what about the problem that Zambia can't get away from, which is its landlocked status?
That is likely to continue to be an issue. And it's not necessarily going to be manufacturing then, which, unless it's closely associated with the mining industry, which is already so significant here. So I can totally understand the focus of the authorities on that. But if you're setting up a motorcycle factory for trade, to sell globally, you'd imagine it needs to be closer to a port. It's going to be more likely to happen in a Kenya than a Zambia.
Now, one of the countries you mentioned earlier, which is having somewhat of a boom in manufacturing, is Ethiopia. Now, Ethiopia is, whilst closer to the coast, it's also a landlocked country. So what are Ethiopia doing that maybe other landlocked countries like Zambia can learn from?
They're flying, as far as I understand, they're flying out a lot of the textile footwear that they're starting to produce because it's not too heavy and therefore not too expensive to fly in a plane. And the advantage of textiles being as Ethiopia is it's not that many hours flight away from Europe. It can become part of a European supply chain reasonably simply. I don't know if that option might be available here.
Okay. I guess one of the things that we've identified before in terms of the comparison between Zambia and other landlocked countries like Ethiopia, even Malawi, for example, which is just next door, is that it seems to be a lot more expensive to do things in Zambia than it does in countries like Ethiopia, like Malawi, just because of the general cost of living expenses, other general expenses which contribute to the economy. In your opinion, why do you think it's so much more expensive in Zambia than other landlocked countries like Ethiopia, like Malawi, for example?
Because I think Ethiopia's got a reasonably decent route to Djibouti. And the Kenyans are planning links to make Lamu and Mombasa a great export route for Ethiopia. So that route is being coordinated between Ethiopia and Kenya. Zambia is just that bit further away from Malawi. It's a little bit closer to Mozambique. It makes it a little bit simpler.
Okay.
What it's telling you is the government needs to do as much as it can to try and improve transport infrastructure. And that can then both lower the costs and produce jobs and have knock-on benefits you didn't expect through new services going down these roads that wasn't part of the original plan. It might have just been about improving trade links.
So we've seen the government in Zambia actually investing a lot into infrastructure. Besides that investment in infrastructure, are there other areas that you feel a country like Zambia needs to be investing in order to take advantage of these future opportunities which are likely to come the way of sub-Saharan Africa?
Well, one of the easier, and it's not easy, but one of the ways that governments can help business is by reducing regulation and bureaucracy, which for quite a long time, perhaps there's an advantage for governments to create jobs in government departments and create regulation and bureaucracy, and that was seen as almost a goal in itself. The trend has changed very much in the last 10 years. Now people use this ease of doing business surveys by the World Bank to make comparisons. They look at Rwanda, which is one of the top 50 countries in the world to do business, and say, well, why couldn't Nigeria in 170th place be more like Rwanda? Make it simple. And Rwanda's example has actually encouraged other neighbouring countries like Burundi to start accelerating reforms to make it easier to start a business. Now, Zambia is in a reasonably decent place, kind of around 110th in the world. That's pretty good by standards, some standards, because there was already a reform effort done some years ago to reduce bureaucracy. But as Rwanda shows, if you're down at 46th, I think it is, versus Zambia at 110th, you could get a lot better still. So one of the changes that the government is talking about is a one-stop shop for starting a new business. The last data I've got is for 2012. It takes nearly 20 days to start a business. That's not bad, actually, by frontier market standards. But Rwanda does it in 2. And the one-stop shop in Zambia could do it in 1. And that could be up and running already by May, June 2015. You're unleashing an entrepreneurial spirit then. You're making it easier and easier for people to be setting up their own businesses and creating their own growth story that doesn't require great government investment plans, just requires the government to make it easier for businesses.
Now, in your role as the Chief Global Economist at Renaissance Capital, obviously your organization is in position of advising investors, where to put their money. Is an issue like being able to start a business in Rwanda in 2 days and able to start a business in Zambia in 20 days really going to affect an investor's decision in terms of where they put their money and where they invest?
Yeah. In fact, I haven't yet seen the single thing that decides an investment. What we know and can see is that when copper prices were rising and copper production was rising and Zambia was growing at 6 or 7% a year, one of the fastest growing economies in the world for a long time, you don't need much else. But when the government was doing some ease of doing business reforms and government finances looked pretty good, it became an even more compelling story. So when Zambia listed, there was huge interest in that stock because it was coming from a country where so much was looking right. Rwanda is a tiny economy, $6 billion economy. It's smaller than the high street sales of Oxford Street in London. However, Singapore started from an extremely small base. And in the 1960s, when Singapore's Lee Kuan Yew was doing a tour of America saying, come and invest in Singapore, American investors were saying, where is Singapore on the map? Sorry, what? That dot? That's kind of what Rwanda's been challenged by. That's saying, where are you? Oh, it's the place with the genocide. Yeah, that was 20 years ago. And look at the positives that are happening now. How can you begin to attract interest in your country? And the very radical reforms that they've done did. We did an IPO for the largest bank, we did an IPO for a brewery, and they attracted interest, attracted money into Rwanda to help growth, to help development, because of these reforms.
Okay, so whilst I'm sure the majority in a number of African countries would be delighted that there's this interest of global blue chip companies coming into their countries, investing, creating jobs, creating skills transfer, also paying their taxes. I think one of the things that people will say in Zambia is, well, we're having 7% consistent economic growth, but that growth is not necessarily filtering down to the common man. Do you see any kind of policies that sub-Saharan African countries can be doing in order for that growth, that wealth to be filtering down to the people who need it the most?
I find this is a really tough issue, because I think that development is fundamentally about inequality, in that everyone starts off in every country globally on subsistence farming. That's what we've all done, from the UK to Japan to many countries in sub-Sahara today. And the first person who goes to get a job in an industrial revolution England with awful working conditions where you'd be dying at 40 because the pollution was so appalling, was on such a better level of pay that income inequality began to rise. And I think if you're going to have parts of the economy growing fast, that income inequality issue is going to happen. And the only way you get rid of poverty is to get people off subsistence farming. China's still got hundreds of millions doing subsistence farming. India's got more people in poverty than Africa today, which is amazing because they're still doing subsistence farming. So how do you resolve that issue? And I think possibly the most effective ways of providing a better opportunity for everyone is through transport infrastructure and, most important of all, education. It's through education that you have the means, the knowledge tools you need to be able to do more than subsistence farming.
Now, I don't think anyone would dispute that education is a very valuable investment in society. However, we're looking at Zambia as one of the most democratic nations in Africa. Now, when you look at investing in education, there's nothing tangible there that you'll see maybe even for 20 years. So by virtue of Zambia being one of the most democratic nations, it's not going to be a vote winner. So the money has to be channeled to something perhaps more tangible. I don't know if you'd agree with that at all.
I wonder whether part of the reason that Kenya's educational breadth expanded so much in the 90s and the 2000s was because of the shift towards a more democratic political system, because it became a competing issue for the political parties. We did a survey of the middle class in Nigeria a couple of years ago, and we discovered, not a great surprise to anyone watching your program, but education is hugely important to an African family, just as it is in China, or just as it is actually across everywhere in the world. But the consequence is that that does become promising better education, or more education, and perhaps free education is quite popular. The question of quality then arises, but that has, I think, helped people win elections in places like Kenya and Ghana. The Ghana election in 2012 was the difference between one guy saying, I offer free education to everybody up to 17, and the next guy saying, I'm going to offer that plus a bit more. That guy won. Public finances got messy. That was a different story. But the education story was actually politically popular, even though the returns for growth, you're right, don't necessarily show through for 10 or 20 years.
Now, what some may argue is that Kenya is less reliant on its natural resources than Zambia, purely due to the fact that it's got less. Now, in a country where you have less natural resources, don't you feel that there is actually a greater need to invest in education because you're in a situation where you have to create something out of nothing? Yeah,
the current account deficit countries, the countries that are importing more than they export, the ones that don't have such plentiful natural resources, or they haven't been discovered yet, they do have to try harder. And actually you see that for equity investors, they see that when they meet companies. You meet companies from countries with current account deficits, and they're often they present very well. They can explain their business very well. Countries that don't need your money, companies in Kuwait, for example, investors find Kuwait one of the least transparent places to invest in frontier markets. And it is frontier, even within the index it is frontier. So yes, where there's the need, you often get the delivery eventually. That tipping point is hard to judge. At what point education suddenly gets sufficient attention, but the current account deficit countries do need education and entrepreneurial spirit.
I mean, even looking at Europe, let's take the example of a country like Switzerland. It's a landlocked country. It's got very little in terms of natural resources, very little in terms of available agricultural land. But due to that entrepreneurial spirit, in basically investing in education, creating something out of nothing, it's one of the strongest economies in Europe. So, do you feel that cases like that, and the case of Kenya, for example, is an argument that actually education is more important than natural resources?
Yes, I think education is more important than natural resources. But if I was to look at a country like Switzerland, I'd also point out the fact that they've been at peace for 500 years. That goes a long way. Same thing the UK, hasn't been invaded by anybody else for the best part of 1,000 years. It means your basic infrastructure doesn't get blown apart by the wars that have beset other countries. Switzerland has been very lucky on that front, helped by its mountains. Too many countries in Africa were stuck in the middle of the Cold War with regimes supported by either the West or the East and terrorist movements or freedom fighters, depending how you see it, funded by the other side, creating conflict. And still where we see conflict, it holds back growth and can hurt education and can damage medium to long-term prospects for countries. So peace and the fact that much of Sub-Sahara has become much more peaceful than it was in the 70s and 80s is also quite an important factor for what's gone right in the last 10, 20 years.
Given the fact that Zambia is regarded as one of the most peaceful nations in sub-Saharan Africa and has also been involved in a lot of conflict resolution around the region and is also a haven for refugees from conflicts in neighboring countries, do you feel that because of that Zambia is at some kind of a competitive advantage to some other attractive places for investment in sub-Saharan Africa?
If you were to look at Zambia and compare it to some of its neighbours, the fact that it's been at peace, while Angola or the DRC, just Mozambique, to mention countries close by anyway, have all been beset by conflict. Education levels still today in Mozambique are suffering because the wars that were still extending into the early 1990s meant that there weren't enough teachers and kids did not get educated. And still Mozambique is facing a challenge. Angola as well. 4G network gets rolled out in Angola by a Chinese company, Huawei, I think, and they couldn't find engineers locally to help them with it. They had to import Chinese labour because there wasn't the educated skill base. Well, Zambia's was already making a decent improvement through the 1990s. At other times when other countries were still fighting conflicts. So I think Zambia, that's perhaps one of the reasons Zambia's grown so fast in the last 10, 15 years.
Looking forward now, because I know your book, The Fastest Billion, it's basically looking at the next 40 years for sub-Saharan Africa. What do you think then are the main areas for improvement for the Zambian economy to be able to take advantage of the opportunities that should be coming the way of sub-Saharan Africa over that period of the next 40 years?
If I look at Zambia and compare it to some other countries, first of all, you think about agriculture and agro-processing. Because of the stability here, because the sector is quite well established, quite successful already, that helps create a cluster effect. That more investment comes into agriculture because it's already working. And then you get services connected to agriculture which start to make it even more attractive to do agriculture. So that's an obvious one. Tourism is another. And yet when I look at tourism and I think of Kenya, when we all think of Kenya, you know, the adverts of safaris and so on, it's quite interesting to remember that Kenya makes more money from transport services than it does from tourism services. It makes more money from Mombasa and the ports and the railway lines extending into East African community than it does from the Masai Mara. So although the picture in our mind is all about zebras crossing the savannah, actually I could imagine similar for Zambia. You are in a central location, you've got connections to a whole host of countries. I could easily imagine this country doing better on the transportation side, potentially. That's just the services. And banking, obviously, I think should also be a great benefit to growth, consumption and so on. The only question I have is about that manufacturing side and to what extent mining can provide some boost to certain types of manufacturing. But I haven't, yes, and whether or not it can actually get the bigger steel factories and so on that you'd expect otherwise in the 2020s and 2030s, I'm not sure yet.
I mean, of late there's been a lot of government mining conflict in Zambia, and we've got issues in the media about are the proper taxes being paid, are things going outside that are not going outside. There's a lot of debate around the mining sector and the fact that is it actually positively contributing to the Zambian economy. Do you think there's anything Zambia can do in order to maybe heal some of the rifts with the mining industry, but also to be earning more revenue from it as well?
That is a minefield, which will just get me into a great deal of trouble, almost whatever I say. However, I will risk it. Because I think I am somewhat sympathetic to the mining guys, who would highlight that they go through long periods, decades sometimes, and oil guys do the same, of incredibly low revenues, where they're barely making any money, barely surviving. The governments don't often do much to help. And then the price ramps up, and that kind of pays back for the 10 or 20 years of low commodity prices. And governments come in and state, no, we want that cash. Mm-hmm. That happens in the UK. We've had a tax on North Sea oil, special extra tax, because the oil price has been higher. It happens globally. It was being talked about in Australia. This is normal. It's politics. And you can understand why. Voters are saying, well, hold on, suddenly there's all this cash, and where's our share? So that again, perhaps it's a political misalignment with the business cycle, and the commodity business cycle for hard commodities is so long, and the voting cycle is relatively so short, that it's always going to be difficult. And I don't know what the right answer is for where the balance needs to be between what the commodity guys should be paying up and what they need to keep for investment in the future.
And I know you've said it quite rightly as well, that it's a minefield, literally, as well. Do you think that perhaps better dialogue between the private sector and the public sector in this matter, and more transparency, maybe the inclusion of the media as well, so that the public is aware of actually the relevant issues at stake? Do you think that can maybe be at least one positive move to at least bringing all stakeholders together?
We've been talking to our equity investors who actually invest in the mining companies, and they've been surprised at how little information exchange there really is between the companies and the mining unions across many countries. Mining unions don't always know what the cost of capital should be, will be for mining companies. They don't necessarily know what mining companies can afford on a multi-year basis. It's much more aware of shorter-term concerns, that guy at the top's getting paid a great deal. Is he working that much harder than the poor bloke slogging his guts out down a mine? Very questionable, and understandable then that you get tension. So more information never hurts, but I'm an economist, I would say.
Of course. Okay, Charles, to finalise, for Zambia, looking forward maybe over the next 5 to 10 years, are there any key things that you think the public and the private sector need to do to try and take the Zambian economy to the next level?
The difficulty for any government in sub-Sahara right now is that the things which I think they need to do, which everybody I think recognises they need to do, are so numerous. You've got to keep investing in education, obviously. That's the long-term bull case for any country. And infrastructure, and make it easier to do business, and increase electricity supply, and try and build better transport links to airports and ports, and also don't spend too much money, because you don't want to get into too much debt and run into that crisis. The list, and try and make government less corrupt, and suddenly, come on, which of these 7 top priorities should be your top priority, and what's the most important thing short term? I think, from my perspective, I suspect the commodity cycle is rolling over, i.e. the price rises of the last 10, 15 years have finished. It doesn't sound very intelligent to say that when the oil price has just dropped $50, but the question is, does it bounce back in 3 months' time or not? And it'll bounce back some, but I would imagine in 1 to 2 years it's not. And as a consequence, governments need to be just much more cautious about what they think the growth drivers are going to be, and how much risk they can take with public finances, when that support of higher commodity prices for Zambia, for example, might not be there.
Just to add one more, apologies, Charles, you mentioned an interesting point there about governments shouldn't spend too much. Now, a lot of commentators have said over recent years that perhaps the Zambian government has overstretched itself. What do you think of that? Whilst, yes, there's been that infrastructure investments, which will certainly have a long-term benefit for the economy, but do you see any short to medium-term problems with the government overstretching itself over recent years?
If you look at the government debt metrics of various types of countries, the guys with generally the best debt position right now are the oil players like Nigeria and Kazakhstan and Russia and Saudi Arabia. They've been pretty responsible. and they've got low debt now, and as they go into a period of lower oil prices, that debt is going to get bigger. But they're starting off so low, it's all right. Others, at the other end of the spectrum, some have borrowed far too much and are actually going to face real challenges. Ghana's the most obvious example in Sub-Sahara. Actually, Zambia's not in such a bad position. 30% of GDP versus, say, 10 for the oil guys, versus more like, at least 60 in Ghana. Zambia's around 30. Yes, it's a commodity story. Perhaps it should have kept it closer to 15 as it was a few years ago. Nonetheless, that it doesn't frighten me as much as Ghana does. And I can think of a lot of countries worse. Greece has got a debt of 180% of GDP. I mean, so relatively, Zambia's not, but it's not quite as good as some of the oil guys. I think it can be, the fiscal situation, the debt story can be contained from here. That we don't need to rerun the 1980s again.
Okay. Do you think that Zambia will get that return on investment before debt repayments become unmanageable?
The borrowing rates at which Zambia's been taking out loans on Eurobonds, closer to 6 or 7 or 8%, I would think that given growth, given great demographics which are very supportive of growth, given new volumes of production from copper, even if the value is going down, maybe the volumes can still be picking up. I would be surprised if Zambia cannot get a decent return of at least the 6 or 7 or 8%, such that the economy's doubled in the next 10 years. If the economy's doubled in the next 10 years, then that debt they've taken on now is relative to the economy halved compared to what it was when they took it out. So the refinancing then becomes very plausible. If the money gets spent on wages, short term, make everyone feel good around election time, that doesn't produce a return. It's very good for a year, or even 2, but it doesn't produce the return over 10 years. It doesn't produce sustainable growth. And it means your economy hasn't doubled over 10 years, and then repaying it becomes a problem.
Okay, now to finalise, Charles. Obviously, is your role as a chief global economist for Renaissance Capital, you advise clients in terms of where to invest, both in Africa but also in other frontier markets. How does Zambia compare competitively to not only other countries in Africa but to other frontier markets as well?
On a number of metrics, Zambia looks pretty good. It's got relatively low debt still. It's had great growth. It's got fantastic demographics. And there's been a good privatization, kind of private sector story that investors can fasten onto. Key problem is just the size of the equity market. For the investors I speak to, it's just too small. Weekly liquidity might be $1 million a week, goes through the stock exchange. And for a fund that's got hundreds of millions to invest, they can't invest hundreds of millions in hundreds of different companies. That's too confusing for any fund manager to try and control. So they're tending to look for companies they can put 10 million into, so they don't have too many companies to try and follow.
Okay, so I guess just to summarise, Zambia is pretty competitive in terms of the global market.
It looks pretty decent to me from looking at it from the macro perspective. And the equity investors coming in probably need to see more liquidity, more turnover on the exchange before they'll put in more money, which then supports growth and makes Zambia even better off. So it's great if it happens. It's good if it happens.
Our guest today was Charles Robertson, Chief Global Economist of Renaissance Capital. Thank you very much for today, Charles. My name is Ray Wilbern. You've been watching the Partners Guide magazine show. Partners Guide means business in Zambia. Remember to stay tuned next week for our debate, which will stem from a lot of the themes that Charles was discussing here. You can follow our debate by logging onto our website, www.pgzambia.com, and also you can follow us on Facebook at Partners Guide Magazine, or alternatively, you can follow us on Twitter at Pgzambia. You've been watching the Partners Guide magazine show. Thank you very much and goodbye.